Welcome, traders. Excuse me. I wanted to make a brief video to show the importance of charts. I always tell all of my traders that charts are the most essential part of my trading. Options, I use that as a tool to enhance what I already know, what I feel like I already know, based off of probability of the chart. I look at the chart. I do my charting on the weekends a lot of times. I come up with a whole list of charts based off of sectors that I feel may go up or go down based off of news that should be coming out within the next few days to weeks to months. And I just want to show you a video how my whole process go, how I approach it. I'm using my Webull app. For me, I teach a lot of my students to use Webull, Mumu, something that's mobile friendly, that has great charts that you can see. And you can get a good idea about what you're looking at before you enter into a trade. So I want to go with a trade that I'm actually in currently. Um, CLNE, which is clean energy fuel. The reason I'm in this, if we click on it first thing I want to do when I click on it, I want to identify what it is exactly I'm clicking on, right? So CLNE, if you scroll down from Webull, you come down to this little tab right here, this word profile. You click that. Webull lays it out plain and simple, exactly what industry it plays in. You see right here, this plays in the oil and gas refine and marketing. Um, oil and gas. You click on it, and it shows you other stocks similar to it. Scroll down, go out of that, click on this. All right, boom. So now I know this particular stock is in the oil and gas. It even has right here a description, a brief description on what the company actually does, right? So if you read the brief description or whatever, clean energy, right? The reason why I got into this stock specifically because President Joe Biden, he has a very strong clean energy initiative, and I know that clean energy is the way of the future. As far as a lot of companies are already gearing towards clean energy, like GE and like this company and a lot of other companies coming up with windmills that can do this, and you know supposedly it's better for the environment. So people are looking for more innovative and things of the future when they think about clean energy and EV, electric vehicle stocks, and AI, artificial intelligence. So this play right here was on me knowing, okay, Biden has a strong oil and gas, clean energy agenda, and just in general, right now, the market has been uh, good on energy. I'm sorry, good on oil and gas. As far as oil and gas has been creeping up on the charts lately, so I wanted to find a oil and gas stock to get into at a decent price, and I can ride it up. So that's the reason why I hopped into it. So, like I said, the first thing, let me back out. The first thing I do when I click into a stock, I want to identify what it is I'm looking at. We go down the bottom, profile, oil and gas. We're looking at oil and gas, which is a great sector for me right now because I know that sector is going up. So I wanted to make this play. All right, once we identify that, a faster way to look at a chart, what I do, I know people are used to looking at this. This is how the majority of traders, the majority of the world, show you how to look at a stock strictly using Japanese candlesticks, which is cool. I use Japanese candlesticks majority of the time myself, but I also incorporate into my trading aerial charts, right? So if I click this icon right here, This drop down screen comes up. I click this right here. I look at it like a mountain. I click on the mountain. Boom. It shows me. So let me go back to this. So the Japanese candlestick chart on Weibo specifically, you can look at it from daily, weekly, monthly, quarterly, and yearly, right? Let's just do the yearly one right here. You can look at it yearly. It's not that many candlesticks available. Quarterly, that's every 3 months. Monthly, weekly, daily, right? That's how you look at it. One of the reasons why I like aerial charts specifically is that I make 100% all of my trades through my phone. And I need something that I can see faster and I think is easier on my eyes to kind of look at what this chart has been doing for a while. So we just did the Japanese candlesticks. Now we're looking at the area chart. You can see it does a day, 5 days, 1 month, 3 months, 1 year, 5 years, and the max. So if I double click into the max, right, to me you can get a better idea. It shows you exactly without doing too much what this chart has been doing on your phone without you having to scroll past too many candlesticks. That's why I like the aerial chart. I like the aerial chart is a overall picture of what price is doing. You can look at the 5 years, look at the max. So let's look at the max, right? If I'm looking at the max, I want to see how high the stock has ever been. Right here is telling me, if I can get my hands steady, it's telling me that the stock has got up to about $17 and oh no, right here, $22.78. That's the highest the stock has ever been. And that was 2010. This is 2021 now, right? So the highest it been was 2010. Just gathering at this data, okay? The numbers may be wrong a little bit because I'm using my finger to scroll over. My finger may have slipped up, but just for the sake of the argument, let's just go with that was the highest. 2278, right? Now to identify the highest, we strictly looking at the max chart. We want to look at where price is currently right now, right? If you look at the top, you can see currently right now price is 1487. Right? I'm still looking at the max. You can see that price is above all of my MA lines. These are my MA lines right here. And for those who may have forgot, MA lines are basically support and resistant lines. And I have my MA line set specifically for 10, 30, 50, 100, and 200. You can see the price is at an uptrend, and it's above all my MA lines. And not only is price at an uptrend, it's at a strong uptrend. Because you can see how it was basically jumped up. Once Biden became president and this clean energy initiative rolled out, it crossed pretty much most of my lines pretty fast and came up. So this is me just eyeballing things, right? This is me gathering information about what the stock is. We identified the sector. Now we looking into where's price. You can see that there's at an uptrend. You can see that usually around this time, people start to sell go into my rectangle. This is going to be my supply zone. Remember, supply is selling, demand is buying. So we can see, usually, from the history of this stock, that a lot of times when it got up to this level, it'll shoot past this level sometimes, and then it'll sell. Let's just make this whole block red. And the reason why we're making this whole block red, because this is when the supply kick in. When it reaches these levels, it hits its peak, and then it comes back down. And since we did the supply, let's do the demand. Since it's already green, I'll make my demand purple. It's going to be my demand. So you can see that when price goes up and gets to these levels, a lot of selling occurs, comes down. Once it hits these levels, a lot of buying occurs. And that's just me eyeballing the chart, right? Nothing's definite right now. That's just me giving you a visual on how I look at it. I want to dive deeper into it now. Let's go to my candlesticks. So if I'm looking at it, and when I use candlesticks, I look at it from mainly 2 points of views. I look at it from my daily, which I'm in right now, and I look at it from my weekly. Because since we're swing traders, we may be in a position for maybe a day or two up into a week or two. So weekly is very important because we're looking to hold it for possibly a week or two. But I look at my daily and I look at my weekly. A lot of times I look at my daily first. Each one of these candlesticks represents a day, right? I always tell my traders, you want to do a few things when you first approach a stock. You first want to identify, after you identified what sector is in and you have your reason for you looking at that sector through FinViz and everything like we talked about, you want to look at the individual stock. You're looking at an individual stock now. Now, the things that you want to identify is first, the average value of that stock. Webull, every broker, every source of information that you can get this type of ticker from is going to have their version of what average volume is. So Webull measures average volume of 3 months. So the average volume of 3 months related to this stock, according to Webull, is 10.18 million in 3 months. That's your average volume. The current volume for the last trading day was 6.17. So when I look at a chart, I want to identify breakdowns or gap ups with a lot of volume because they were my power moves. So if I'm looking at this chart in recent history, the first thing that my eyes go to is this right here. First thing in my eyes jump to is this right here. This was a gap up, right? Whatever happened, I'm assuming great news came out. This probably when Biden first became president. This stock decided to gap up. And when it gapped up, before it gapped up, you can see that volume. Now, mind you, the average volume for this is about 10 million. So on this day, it was trading for 6 million, 6.33. The next day, it was trading for 31.63. That's about 3 times more than the average volume. That's very high, right? And you see it was a gap up. News was so great that stock price didn't even go to these levels. It skipped past these levels. So on this day, the highest was 1308. The next day, the highest was 1842. So stock price decided to skip all of this right here. All of this. So that shows you that a lot of demand kicked in. A lot of demand kicked in. Once demand kicked in, FOMO, fear of missing out. People started buying. So price kept going up. Price went up for the next 2 days. As you can see, went up the next 2 days. This day, it reached a high of 1979. But volume was still decent. Volume was at 14.57, which is still higher than the average volume. But both buyers and sellers have to agree if they feel like the price represent what that specific stock should be at the moment. So once it reached up to 1979, both buyers and sellers was like, nah, this too high. We don't want this. So you can see price start going down again. Right? Price start going down, and then eventually it hit right here. So if I had to draw a trend line, let's make my trend line black. We can see price came up right here. And it reached this high, right? We can also see both buyers and sellers saying, nah, this way too high. So price come down and it reached this low. Right? Let me do this too, just so it can be clearer while I'm recording. I'm going to take away my MA lines because this is supply and demand what I'm talking about. I want you to see the power of supply and demand. So we seen price go up. We see price go down, right? Price came down to a demand zone. Matter of fact, I'm going to delete that. I want to make another rectangle, and I'm going to make it green. Teal. I'm going to make it teal. I'm just going to put it for about right here. I think that's decent. This is a demand zone right here. You can see that when price is in this area, a lot of times it consolidates, but it doesn't go below. It consolidates and it pops up. And then it's coming back down when that was popping back up. So this is my demand zone. Remember, demand is buying, supply is selling. So both buyers and sellers, as you can see, this is my daily chart. Both buyers and sellers on a daily chart agreed that when price gets in this area, there's more buying than it is selling. This is my demand zone. So You can see when it first kicked off, price came up, price went down. It was consolidating, going back and forth. This particular day, bounced up even more, and then it really took off, and then it started to come back down. Now is in the previous consolidating demand buying zone, and now was slowly leaving back out. So if I'm doing that, I have my buying zone is only right that I have my selling zone too. And I say zone a lot because I don't want you to get specifically caught up in a number. Like a lot of people train traders to look at specific numbers, but it's not really a specific number. It's more of a zone. You playing zone defense, like football, basketball. If a person playing zone, they have a area to cover. You know, if I'm a cornerback playing football, I'm playing zone. This is my area. Anybody in my area, I'm sticking. I look at stock charts, similar. Anytime price is in this area, the probability of it selling is higher. The probability of people buying is higher because we established previous buying and selling of this stock at this specific price. So if we want to go over it again, you see right here, we are in a demand zone. Buyers and sellers both agree that more people should buy in this area. You see that it went past my demand zone a little bit, making it even more of a demand stock. Which this will probably I would have bought. I would have bought at this candlestick right here. You see, it came up, dipped down. Then great news came out. Price went up. This is my selling zone, supply zone. A lot of supply came in. You can see it bounce down. Boom. Bounce right back into the demand zone. Stayed in the demand zone for about 2 days, 3 days. 1, 2, 3. And then you can see price gap back up. A small gap right here off of earnings. So earnings must have been great. Bounced here. So right here, looking at the chart, I say to myself, this chart is at an uptrend. It's about to be at an uptrend. Now, you notice I don't have no MA lines drawn out right now. This is just me looking at supply and demand. I established by just looking at it, this is my demand zone. This is my supply zone. I see price came up, price dipped down. It jumped in the pool right here, got its feet wet a little bit. You feel me? Now it's going back up. So I said to myself, knowing everything that I collected from it, I said, okay, this is a clean energy stock. Biden loves clean energy. Oil and gas is related to oil and gas. Oil and gas has been going up. This is something that I think may pop soon. I identified the last power move that this stock had, where the average volume of this being 10 million, it passed 10 million right here. 31 million, about 3 times the average volume. I identified that. And I seen, it came up, it sold off, came down. Now I'm starting to see volume picking back up. Once it hit my demand zone, you start to see it starting to pick back up. 10 million, 6 million. $8 million, $9 million, $7 million, $6 million. So it's still not at the average volume yet, but you can see that it's raising up to get into the average volume and maybe anticipating a larger move. You understand what I'm saying? So I got into this stock when it was right here. I always say I want to buy into the weakness and I want to sell into the strength. So if I'm buying a call, I want to try to buy a call on a red day. If I'm buying a put, I want to try to buy a put on a green day. So once I establish that, I feel like the probability, because you're never 100% sure of anything. When you're trading, anything can go sideways. It could turn left at any moment. But once I decided that the probability of this stock reaching up to the supply kicking in, because there's a lot of demand at the moment, I said to myself, well, if this right here, this red block is my supply, right here is my demand, I bought in right here, what's the probability of it going up to this red block and selling off before it come back down to this teal block and sell off? So I said, I'm willing to place a bet that it'll reach up to this red block based off of all the information that I gathered, the sector that it's in, how people, oil and gas, commodities, and all that other stuff, all the other research I did. I said to myself, I think that it has a higher probability reaching this red block than it does going back down to the green block. So I placed my bet on this day. And for somebody like me, I got in, since I buy options, it's not about when I got in because I'm not buying shares. It's about my option contracts, how much I paid for it. I got in this day, and I could have sold this day because I bought enough contracts to actually, ease what I already made. I'd have made my money back on this day. But I'm in it for the longer term. So I'm holding to about maybe 17. So let's just say I bought at the hottest day, 14.29. And if I sell it at 17, you know what I mean? 15, 16, 17, 18, 19, 19 right here. That could be a $4 to $5 profit. You feel me? A $4 to $5 profit. And it may go up past this. But I got in it early enough to see what was going on. And I sold and took my profit. So that's the way I look at it.